the bullish breakout, and whether it can be trusted or not. Let's ask Anastasia Amoroso, iCapital's chief investment strategist, with me here once again at Post 9. Welcome back. It's good to see you.
Good to see you.
Do you trust this move?
I do trust it. Look, Scott, there's three reasons why the markets have been rallying this year, which is inflation has clearly been slowing, and we saw that in the CPI report. I mean, there's a lot of good news that I think the Fed will take solace from. The fact that month-over-month rate of change is just barely there. The fact that the super core measure dropped to 4.6% versus the 5% that it was before. So inflation is clearly slowing, and that means, in turn, that the Fed should be close to pausing, and that's also great news for stocks. And then the third point is I love the cyclicals rally, because guess what? This economy has been surprising to the upside. Earnings revisions have actually been going up, and that's why this breadth of the market has been broadening out.
So you feel like the bulls, have absolute control at this point of this market?
I do. Look, I do want to say that near term we might be approaching some sort of stretch levels. I mean, what's been happening over the last few weeks now has been this capitulation into risk. And it started with systematic investors, the CTAs, commodity trading advisors that have piled in. Then you've had hedge funds that have been chasing technology, and now they're chasing the cyclicals like financials. Now you've got mutual funds that are starting to get back in there. And you're also kind of at the peak of corporate buybacks open window. And at the same time, the S&P relative strength indicators now actually above 70. So I do feel like, the bulk of this capitulation into risk near term may have happened. But you take a step back and you look at how much cash has gone into bonds, how much cash has gone into cash. I think that longer term rally does have legs.
What if we're getting too excited about this print that we got on the CPI today? Wolf Research, for example, says, quote, "We continue to believe this year's rip higher has been a classic bear market rally. Inflation's going to remain sticky. The Fed will be higher for longer, and a recession will hit later this year." Isn't that better odds than not of what's going to happen?
Well, people have been calling for a recession for a long time now, but I think the Fed pause may actually be real, and the Fed may ultimately pause at 5.5%. The reason I say that, Scott, is because if you look at this really important relationship between the Fed funds rate and the core PC inflation, there's a gap that finally opened up that's positive. For the long time, the Fed has been chasing their tail, but now there is a delta there. So the Fed can just stay pat, and inflation has slowed down already and is on track to get to 3.6%.
So you think the Fed's done?
I think the Fed is really close to done. There's another.
Close to done and done are two different things.
Well, I think we're talking about 25 basis points. I think they're close to done in July. There's a 60% probability that they go another time in July. But it's that delta that matters. If they just follow the consensus forecast, then the core PC goes from 4.6 to 3.6. And by the way, there's a credit cycle tightening that's playing out. So maybe they don't have to do much more than just be close to done.
What do you make of what's happened with Nasdaq, which is, up like 30% on the year? Jonathan Krinsky, I mean, there are a lot of non-believers, okay, still. Now maybe that's just because the last 18 months have been so turbulent for the market. And given the 500 basis points that the Fed's already hiked, and the fact that the economy is weakening off of where it was, some are not willing to sound the all clear. He says, well, we feel a bit like a broken record. Today's gap up on Nasdaq, NDX, is all the hallmarks of a parabolic blow-off top, as the boat is getting very one-sided. Now, I know that it's gotten a little more broad in the last few sessions, but how about that point?
Yeah, I'm a believer in the Nasdaq, and for a very simple reason is stocks that typically deliver above average earnings growth rate, they typically outperform over a longer period of time. And if you look at a lot of companies in the Nasdaq, they are growing their earnings at double the S&P 500. Now, having said that, if you look at the valuations of technology, for example, relative to its 10-year average, it's a bit extended. If you look at communication services, also extended relative to the 10-year average. So I do think we have a rotation trade in the making. As I mentioned, all the hedge funds have chased TMT. Guess what? They've been selling them for the last week or so, and they've been buying back into financials. So it's all about the perspective. But if I get a pullback in the Nasdaq, which I honestly hope we do, off these very high levels, I want to step back in, given that's where the earnings growth rate is.